good morning. You're watching Market Cafe. This is ET Now and I am Snehi Shah. Thanks for choosing to start your week with us. Now, this is a show where we take you through all the important global stories that you need to be tracking, the cues that you need to be keeping for today as well as for the rest of the week on your radar, as well as towards the second half of the show, we'll go stock specific. We'll tell you about all the stocks that could be potential buzzers in today's trading session, as well as the ones that brokerages are keeping on their radar. But let's start the show with the global handover then before we delve into the markets back home. And let's start by seeing how the US markets have done, and stock futures edged higher in overnight trading Sunday as the market is set to enter the last week of trading in September with big losses. Stocks have struggled this month as the Fed Reserve signaled higher interest rates for longer, sending bond yields rising. Now, the benchmark 10-year Treasury yield has surged more than 30 bips this month to 4.43% to that mark. The market also contended with a rally in crude oil and a winning streak in the dollar during the seasonally weak trading month. Now, the S&P 500 has fallen 4.2% this month, on pace for its second straight losing month and the worst coming in since December of last year. Now, the tech-heavy Nasdaq Composite is down almost 6%, close to that 5.9% mark in September, as growth stocks bore the brunt of the sell-off, also headed for its biggest monthly loss since December last year. Dow is off by more than a modest 2.2% this month, and investors are also closely monitoring progress on the budget resolution in Washington. Lawmakers over the weekend have expressed few signs of movement on the deal that would keep the US government funded for the remainder of the fiscal year. The Congress, however, is still in a stalemate on the federal budget, as GOP hardliners refuse to budge on further spending cuts. So this is the handover coming in from US. While the indices saw slight cuts on Friday, on a monthly basis, these markets are down. Let's shift focus and look at European markets then. And European markets closed lower on Friday as the prospect of higher for longer interest rates emerged from a slew of central bank decisions last week. The Pan-European Stock 600 index ended the sessions down 0.3%, taking its losses for the week to 1.5%, its worst performance since mid-August. FTSE came in largely flat, did nothing on Friday. The construction material stocks dropped almost 1% on Friday, while tech stocks added 0.7%. So, negative handover coming in from Europe as well as the US. But while this was on the equity front, I'm joined in the studio by my colleague Harsh. Good morning, Harsh. Take us through what oil and other commodities did.
Well, yes, absolutely, Snehi. And, one piece that could be noted, especially at the start of trade today, is that US futures are looking mildly positive, as is the SGX Nifty. So that's something to keep on our radar as well. But quickly on to oil as well as general commodities. Let's, crude prices have been in a bit of a whipsaw over the last week or so, and that continues to be the case even as we open up on Monday. We are seeing WTI at around $90.50 a barrel. We are seeing Brent above the $93.50 a barrel mark, and that's largely on the back of the fact that one, there is of course a demand compression which is going to be at play, which ideally should lead oil prices lower. But what we're also seeing is Russia has limited its exports to only certain countries, which basically excludes a large chunk of the globe and the global demand. So therefore, what we're seeing is a little bit of a bounce back in crude oil prices, and that's exactly what's happened, around 0.5% higher on crude, at least as we start this week off. Have to wait and watch how that progresses. Let's also check out gold. Gold gains a little bit on the back of course, the Fed meet that came through last week, as well as the rate hike. The dollar index seems to be gaining, and therefore we're seeing gold as well largely soft in early trade to start this week off. We're seeing gold at $1,944 an ounce.
Absolutely. So that's how the commodities have done, Brent as well as gold. But with that, let's also take a look at a list of all the cues that you need to be keeping on your radar for today as well as for the remainder of the week. Now, on 29th September, a lot of action is going to happen back home because you've got the India balance of payments numbers coming. Current account balance numbers will be out, as well as the fiscal deficit data will be out. Globally, on the 28th of September, you've got the US GDP and initial jobless claims data coming out. On 29th September for UK, you've got the GDP figures as well as the Eurozone CPI figures coming out. For China, on the 29th of September, you've got the cakes and service manufacturing as well as the composite PMI's number coming out. And Chinese markets, the Golden Week holiday begins for the Chinese markets as well. Corporate action, well, today you've got a lot of companies reporting their quarter one earnings. You've got Ratnavir Precision, and you've also got Vishnu Prakash R. Punglia that will report its corporate earnings today for the quarter one. Also on other corporate action front, then you've got L&T buyback tender will close today. That's September 25th, which is today. September 27, you've got the BSE buyback tender offer closing. And also, well, today you've also got Sheela Foam. The board is going to meet to mull and approve prices. So, well, lots of action happening back home as well. And, well, we'll continue with the list of action. Then 28th September will be the weekly expiry and Accenture earnings will be out. 29th September, Nifty indices will be rebalanced. And when it comes to the IPO action, well, you've got JSW Infra, Updater Services, as well as Valiant Laboratories will open for subscription this week. And well, on the 28th of September, you've also got an IPO that will be listing on D Street, and that is Yatra Online. So this IPO will also be listing. So like I mentioned, well, we've got a lot of cues to watch out for a week full of action, Harsh.
Absolutely, a week full of action going forward. Let's stick with macros. Starting off with the Bank of Japan, held its ultra low interest rates unchanged in the month of in the September edition as well, giving a dovish stance on future policy, indicating it is not in a rush to end its significant monetary stimulus. The central bank maintained a 0.1% interest rate target yield on the 10-year government bonds of roughly 0%.
And iPhone maker Apple has plans to scale up production in India 5 times to around $40 billion over the next 5 years. The company plans to start manufacturing AirPods next year as well. However, according to the company sources, there are no immediate plans to make iPads or laptops in India anytime soon.
Right, shifting gears, as per Reuters, Citigroup has warned its UK-based employees of the likelihood of redundancies as the lender pushes ahead with a sweeping reorganization. This move could affect hundreds of jobs in the country. Remember, the bank has about 16,000 employees in the UK.
Well, keeping it with job cuts, then Goodyear Tire and Rubber announced that it will eliminate 700 jobs and sell about 100 retail stores in fleet locations under a rationalization plan for its Asia Pacific segment. Now, this move is expected to improve the segment's operating income by approximately $50 million to $55 million in 2025.
Right, and in some worrying commentary from ex-Chinese officials, China's 1.4 billion population will not be enough to fill the empty apartments across the country. The crisis-hit property market that was once the pillar of the economy has slumped since 2021 after the Evergrande Group defaulted on its debt obligations.
Well, with that, let's slip into a very short break. Or when we return, we'll take stock of how the Asian markets have opened up, so stay tuned.
Right, welcome back. Quickly, as promised, the buzzers that are making news over the weekend. First off was Delta Corp. Well, the casino chain informed stock exchanges that it has received intimations from the Director General of GST Intelligence, Hyderabad, for payment of shortfall tax under GST, along with interest and penalty for the period July 2017 to March 2022. Of course, this is retrospective. And the amount involved is quite large, 11,140 crore on Delta Corp itself, as well as other notices to its subsidiaries worth 5,682 crore, totaling roughly 16,800 odd crore. Delta plus subsidiaries combined is around 16,800 crore. And currently the market cap of Delta Corp is, of course, 4,000 odd crore. So this is something that one has to wait and watch out as to how this plays out. But this is not a surprise largely, and that's because, of course, you did expect this liability to come up because of those clarifications coming in on gross value on the basis of which GST was to be calculated by Delta Corp, which wasn't being done, of course, in the past. So on the back of that, you will see some pressure, or expect to see some pressure on Delta Corp stock today.
Well, all right, Delta Corp will be in focus on the back of that news flow. But now that Indian bonds will be included in the JP Morgan Emerging Market Index, how will it affect PSU banks? Somit is here with an analysis. Good morning, Somit. Take it away.
Well, PSU banks of late have been running up very strongly, and one of the major reason behind this is the bond inclusion. Now, JP Morgan has added Indian bonds, and this will be done from June of 2024. That is the next financial year as well. Now, in the past 1 year, if you see, the index provider has added China, Brazil, Indonesia, and Malaysia's government securities also in their index. Now, China's 1 year GSEC yields had dropped around 60 to 70 basis points before the inclusion that happened back in February 2020. Now, this if Indian bonds yields also fall going forward, and this is what pretty much on the expected lines, then PSU banks will stand to gain as per BNK Securities. Now, among PSU banks, SBI, PNB, and Indian Bank would be the key gainers. Now, the treasury gains would contribute around 10 to 24% of the FY estimated pre-provisioning operating profit as per the broking firm. Now, the broking firm is saying that SBI probable treasury gains for FY24 would be close to 2,752 odd crore rupees if there is a drop of around 25 basis points on the yields, which will contribute around 11.7% of the quarterly PPOP. For PNB, it is around 724 crore, which is close to 10.5%. Indian Bank could see a gain of around 8.2%, while there is Bank of India, Bank of Baroda, Canara Bank, and Union Bank, which could gain anywhere between 4 to 7.6% because of a 25 basis points drop in the GSEC yields, and that will be on the back of the fact that JP Morgan has added Indian bonds to the index.
Right. Somit, stick with us. HDFC Bank's lost around 1.2 lakh crore in market cap since the merger, down 6% so far in 2023. So what's ailing it? You're going to take us through some of those details. Take it away.
Well, since merger was completed for HDFC Bank and HDFC, if you see, the market capitalization of the combined HDFC Bank now has dropped by around 1.2 lakh crore rupees. Now, this drop in market capitalization of HDFC Bank is actually more than that of IndusInd Bank's market capitalization and combined market capitalization of IDFC First and Yes Bank. Now, IndusInd market capitalization stands at around 1.1 lakh crore rupees, while that of IDFC First and Yes Bank combined stands at close to 1.13 lakh crore. Now, never in the last 9 years do you remember that HDFC shares have given a negative returns on a yearly basis, and so far in 2023, if you see, the stock is down around 6 odd percent. Now, since 1996, if you see, only 5 times, that is in 1998, 2002, 2008, 2011, and 2013, has HDFC Bank given a negative return on a yearly basis. Apart from that, it has never given a negative return on a yearly basis, and so far the stock is down around 6 odd percent. Now, why this fall in share prices or the loss in market capitalization that we have seen when it comes to HDFC? Now, it took around a $2.5 billion hit, that is close to 21,000 crore rupees markdown on HDFC's net worth, and this could be recouped over a time as per CLSA. Now, apart from this, the company also said in their analyst meet that there could be a net interest margin dilution of around 25 to 30 basis points because of excess liquidity, and this will be an actual economic loss. Also, the annualized impact on because of this drop in NIMs would be close to around 3,800 crore rupees as per brokerages, and the PAT impact on the ICRR in the Q2 would be close to 400 crore rupees, which means that nearly 1.2 lakh crore rupees of market capitalization has been wiped off for an impact of close to 25,200 crore rupees, of which actually 21,000 could be recouped over a period of time by HDFC Bank. Now, what could be the key triggers for HDFC Bank going forward? Firstly, it continues to be clearly ahead of its peers when it comes to deposit growth and asset quality growth. Its margins are expected to improve. In fact, it is expected to expand by around 10 basis points from Q2, around 3.4% in the fourth quarter, and in FY25 it is expected to expand to around 3.5%. Also, its cost to asset ratio is expected to improve, and the credit cost is also expected to improve as per brokerages going forward. Now, if you see the 12-month forward valuation of HDFC Bank, it stands at close to 2.9 times as against its 5-year average of close to 3.9 times, and the return potential as per the Bloomberg terminal is more than 30%, which is a key positive coming in for HDFC Bank going forward.
Well, thanks, Amit, for taking us through that and breaking down what's ailing HDFC Bank for us. On the back of that, the stock will continue to remain in focus. But in an exclusive conversation with ET Now, the member to PM's Economic Advisory Council, Sanjeev Sanyal, shares how the inclusion of Indian government bonds to JP Morgan's Emerging Markets Index may help bonds and aid higher fund flows into India. Here's an excerpt of what he had to say.
Well, this has been in the works for some time, so it's not a surprise. The government and these index folks have been working together on this for quite some time. You can't do something like this overnight. So there were many iterations and talks over the last few years. And so it's now come to fruition. And you can see that we are now going to be included in this index, and the weightage will eventually go up to something like 10%. So in that sense, it paves the way for some 24 billion odd from just this one index coming through into the Indian bond market over the next 12 to 18 months. But also do remember that there are several other bond indices as well. And now that JP Morgan, which is one of the bigger ones, has included us, then it is very likely that some of the others will do so as well. And the impact of that will be that up to something like $40 billion worth of passively managed bond money, fixed income money, will come into the Indian financial market. So that's good. It's a source of capital. It's relatively more stable than actively managed money. And it tends to, the impact of that is that it brings in cheaper capital into our economy. So it, in that sense, lowers the cost of capital. And since it specifically invests into government bonds, it also means that the government's own yields will, over a period of time, come down.
Well, that's the word coming in from Sanjeev Sanyal. But keeping it with this bond inclusion move, then Department of Economic Affairs Secretary Ajay Seth has welcomed this move, and talking exclusively to ET Now, he said that this inclusion will have impact across several fields. Listen in to what he had to say.
It is a welcome decision, and it shows a strong confidence in Indian economy.
Okay. And sir, how it is going to positively impact the bond market going forward?
See, I said it shows a strong confidence in Indian economy. So the impact will be in several fields. I would not like to elaborate at this point of time.
Well, and India's chief economic advisor V. Ananta Nageshwaran shares that the Indian rupee may see some appreciation on the back of this bond inclusion as well. Listen in to what he also had to say.
Well, naturally, there will be a tendency for the currency to appreciate, just as it happened between 2003 and 8 when capital inflows into India surged. And therefore, when there is a demand for investors to buy the Indian government bonds denominated in rupees, then naturally the demand for rupee will increase, and everything else being equal, naturally it will lead to a potential for rupee's nominal appreciation. So that is both a positive and a challenge because we have to make sure that the rupee stays competitive as well. So in that sense, there is a potential for currency appreciation when the index inclusion starts to happen and the demand from investors for Indian government securities starts to rise.
Right, and quickly moving on, speaking at Micron's groundbreaking ceremony in Sanand in Gujarat, Union Minister Ashwini Vaishnaw says the global semiconductor industry sees India as the next big semiconductor hub. What's next for India in the chip space? Let's listen in to this exclusive conversation he had with my colleague Sumita Karir.
Stated that by December 2024, right, you will have India's first India-made chip. But what's next for phase 2? This is phase 1. What's next coming up for phase 2?
See, the speed at which this project has progressed, that speed and the methodical execution by our Prime Minister has given a lot of confidence to the entire global industry. And G20 also played a major role in that, because G20 was, the way it was organized, this has reinforced the trusted global supply chain, global value chain partner that has got that Prime Minister has established our country as. So that confidence has got reinforced. So that this kind of, all these factors are today placing India in a situation where the entire world wants to come to India. So we should see very soon at least 2 more very good proposals in the coming months. Let's say in the coming 4 to 6 months time frame, we should see 2 more very good proposals which will establish India as a leader in some of the very niche and specialized segments in semiconductor industry.
Yes. So I also want to ask about, you've been in touch with other semiconductor companies as well. There have been visits to the United States as well. How is the global semiconductor industry? Because remember, we are in the era of a chip war. This is the chip race to sort of dominate the next set of technology. How are your global counterparts seeing India?
The entire global semiconductor industry sees India as a natural next big semiconductor hub. Talent, we have the talent. Design capabilities, we have the design capabilities. Green power, a major component of our power generation capacity is today green. The infrastructure growth which is happening, that is available here. The university system that is in India. All the factors support the requirements of the global semiconductor industry, and that combined with the stable policy, the stability of our politics, the way our Prime Minister has set out the policies, the way those policies are executed, that has given a huge confidence to the entire global semiconductor industry.
Well, that's the word coming in from Ashwini Vaishnav. But let's quickly shift focus to commodities then. And while both Brent and WTI have managed to cross that $90 per barrel mark, Faridun Fisharaki, founder and chairman of FGE, says that OPEC has cut back on supply and that they want crude prices to stay within that $85 to $95 per barrel range. He also says that there could be downward pressure on the market going ahead. Listen into his views.
On the supply side, OPEC Plus has been very diligent, and they've been holding the supplies back. They want to see the prices in the $85, $95 range, and we are close to $95. It probably is going to stay between 90 to 95, maybe a little bit below 90, but I doubt whether it would hit 100 or not. But on the other hand is the concerns about the financial markets, worries about recession, worries about the Federal Reserve rate increases. And every time one bank goes bankrupt in the US and Europe, then there is all negative sentiments as far as oil price is concerned. But actually the fundamentals are pretty sound. I think on the downside probably will not go below 80 because the OPEC Plus will not allow it by trying to control the market, but there could be downward pressure on the market because the demand fundamentals are not going to be the same next year as this year.
Right. Let's quickly move on. H.M. Bangur, who's the MD of Shree Cement, says he sees demand for cement and housing to continue for the next 5 years. Let's hear out an excerpt from that chat he had with my colleague Anurag Shah.
Demand of 7 to 8% CAGR is expected for next 5 years to 7 years, and this is a big demand growth
in your cement sector.
In cement sector, there are two triggers. One is income level, prosperity of Indians is definitely moving up. All their need of roti kapda is over. There are no, not as poor as we are made out to be. I feel because of the so many benefits which are given by government and different state and central government, people wants to become poor or at least pay some bribe to register themselves as poor. But India is not as poor. That we can see with all our airlines, restaurants are full, all luxury items. You just see iPhone 15 now has been launched, and what kind of line? Yes. It doesn't show a poor country. And it is not the line of only the very rich people. Middle class is now buying it.
You're saying that in housing sector, in cement sector, there is a good demand and it will continue for next few years. And sir, any kind of inflationary pressure you are seeing, and we can see the price hike in cement prices?
Price hike is always less than inflation that you have seen in last 10 years, 20 years, 40 years, 50 years. Now we are, if the inflation is 6%, price rise will be.
Well, that's the word coming in from the top boss at Shree Cement. But with that, let's slip into a very short break and you stay tuned because when we return, we'll go stock specific.
Right, welcome back. Let's quickly look at what are the F&O trends that are actually playing out. We're seeing lower highs and lower lows for a fourth straight session all through last week. Remember, it was a truncated week last week. And despite of this, the index seems to have reached around the 19,650 level, and there is some short-term support at that level at the moment. Let's quickly move on to what happened in the F&O segment. There was some long unwinding which was seen in the Nifty futures. There was open interest decreasing by roughly 4% or thereabouts, and we're also seeing indications that the bulls are losing strength on the back of those. On the options front, good call writing happening at 19,800 strike levels, and you're seeing an indication of a strong resistance at this level as well. What FIIs have done? Well, index futures, they've added 9,000 shorts, really adding to some bit of negativity, and you're seeing a reduction in long positions as well, as you can see on your screen. And what you're also seeing is the Nifty seems bearish, especially if it's below that 19,800 to 19,850 kind of a mark, and some short-term support can be seen around 19,650. That's what the levels are at the moment, at least to start this week off.
Alright, Harsh, with that, let's also take a look at some action coming in from the primary markets, and you've got the Updater Services IPO that will be hitting these streets today. It will be open for subscription is what I mean. And let's take a look at what this IPO is all about. Well, here are some details that you need to know, and the price band is between 280 to 300 rupees per share. The issue will stay open till the 27th of September. Fresh issue is worth 400 crore rupees with an offer for sale of 80 lakh shares, and the company aims to raise around 640 crore service. Some few key highlights that you need to know, and promoters hold 80.5% stake in the company. Promoter Tangi Facility Solutions will sell 40 lakh shares, and India Biz Excellence Fund 2 as well as 2A will sell 40 lakh shares as well. The anchor book will be launched on, was already launched on September 22nd, and the OFS size has been reduced from 1.3 crore to 80 lakh. Now let's look at what these IPO proceeds will be used for, how the company aims and plans to use these funds. They will be used to repay debt and to organize working capital, and also for the company's inorganic initiatives. Let's take a look at how this company compares to its peers when it comes to price to earnings. And Quest Corp, you've got trading at 23.3 times price to earnings, SIS at 19.7 times, and Team Lease at 40.9 times. So this is how the peers in this space look like. And let's take a look at how this company fared in FY23. The PAT came in at 34.6%, 34.6 crores, pardon me, which was down 40% on an annualized basis, and the revenue came in at 2,104.9 crore rupees. So largely this is what the IPO looks like. IPO opens today and will stay open till the 27th of September for subscription.
Right, let's quickly move on. We had Metro Brands, which had a management meet as well. Well, what Nuvama really takes away from this is they're increasing to further, they're aiming and planning to further increase share in online. Q1 FY24 currently was roughly 11% or thereabouts. Store addition also to be equally spread out across three brands. Metro Brands also seems to suggest that there is an inventory cleanup which will happen in year one. Year two, they will look to position themselves correctly, and year three, they'll aim to accelerate and grow. Of course, may take some time for some of these to start getting realized, and therefore that's largely the game plan that they have going forward. Of course, in focus Metro Brands on the back of that key management meet.
Well, absolutely. Metro Brands is going to be another stock that will be in focus today. Let's also talk a little bit about, what happened over the week when it comes to sports. And we've seen a lot of action that came in. Verstappen has reclaimed that pole position in the Japan MotoGP. You've also got action coming in from India's MotoGP as well. And India has beaten Australia to lead the series 2-0. With that, let's also quickly revisit all the important market voices and the managements that we have lined up for you. Starting at 9:20, we will be joined by Ganesh Ram Jayaraman, who is the MD and head at Avendus Spark, and he will be here to talk about the markets as they are and where he's seeing positivity and the themes that he's currently betting on. Followed by that, at 9:35, we will be joined by Sri Krishnan H, who's the MD and CEO of Karnataka Bank, and he will be talking about the company's fundraising plans going ahead. At 9:45, Manish Dangi, who's the founder of Macro Mosaic Investing, will be joining us to talk about markets, macros, and more. Followed by that, at 10 a.m., we have a big exclusive lined up for you. Yashish Dahiya, the chairman and CEO of PB Fintech, will be joining to share the growth roadmap of the company. At 10:20, we will be joined by Srinivasa Nadadur, who's the CFO of eClerk Services, and he will be talking about the demand trends in the sector and if he sees them improving anytime soon. And lastly, at 10:30, we will have Shashank Srivastava, who's the Senior Executive Officer of Marketing and Sales at Maruti Suzuki India. He will be joining us to talk about the company's new launches and the company's plans going ahead. So lots of important market voices and managements lined up for you throughout the day. So stay tuned to ET Now.
Absolutely. Let's also quickly look at, before we close out for this show, let's quickly look at how Asian markets are doing. In fact, US futures continue to be marginally positive, so that's a plus. But Asian indices largely in the minus, except let's start off with the Nikkei, which is up around 2/3%. Let's have that on our screen. That's probably so around 3/4% higher on the Nikkei. But let's look at some of the other indices as well. Largely red is what we're seeing across the board. Otherwise, the SX 200 down around 1/3%, the Hang Seng down over 1%, the Shanghai also down around 2/5% or thereabouts, and you're seeing red on the Kospi as well, down 0.5% in trade. You're looking at the Gift Nifty, which is indicating around 1/4% higher. At least we're hoping for a positive start to trade today after what was quite a tough week for markets last week, Snehi.
Absolutely, Harsh. And amid a market setup like this, let's take our viewers across a list of all the important stocks that also could be buzzing. It could be potential buzzers today and could be in focus. For that, we are joined by Sharad. Sharad, take it away.
Well, yes, in focus, of course, the bank names are also there. Karnataka Bank, they will be actually intending to issue equity share capital of roughly 1,500 crore rupees, and that will be, of course, coming in also from the preferential issue of roughly 800 odd crore rupees. And also the steel stocks would be in focus, like Tata Steel, JSW Steel, and this is important because the Indian steel mills have actually hiked the prices for almost 750 rupees per ton, and this is the second price hike coming in. Also, ICICI Lombard would be in focus, where Sanjeev Mantri, he has been appointed as the MD and CEO of the company, and this is for the next 5 years, and he's already served leadership positions when it comes for the ICICI Group. Cholamandalam Financial Holdings important because Nomura Investment Fund, they have acquired roughly 0.8% stake, and recently Zaggle Prepaid Services, which was kind of coming in the bourses. Over here we see ValueQuest Investment Advisors from the open market. They have acquired 3.6% stake in the company. Importantly, Ircon International also signed a contract with the Sri Lankan government for roughly 120 odd crore rupees. Strides Pharma would be in focus, and this is coming in for the receipt of the US FDA approval for fat reduction drug. And today at 5 p.m. there is an important analyst meet also, where the company will be considering to combine its CDMO business, a kind of a restructuring move. So something to watch out for in the day trade. And lastly, another name coming from the pharma space is Sanofi India, where the company has received a no objection coming from BSE when it comes for the demerger of its consumer healthcare business.
Well, all right, Sharad, thanks for taking us through that list. We will keep an eye out for all of these stocks, but the JSW Infra IPO will also open for subscription today, and it's going to be the first company from the JSW Group to launch an IPO in the last 13 years. So, Sharad, take us through the details of this IPO and break it down for our viewers.
Well, yes, in focus we are having JSW Infra. The IPO has opening today, and this is coming in first time in the last 13 years from JSW Group. Of course, they have raised roughly 1,260 crore rupees from anchor investors, and big names include GIC as well. Now, looking at the details, the listing date would be expected to be on October 6th. The face value is 2 rupees per share. The price band, important, is 113 to 119 rupees per share, where overall the IPO size is 2,800 crore rupees, and this is an entirely fresh issue coming in. Now, the utilization of proceeds, of course, would be there for reduction of debt also, and the management had earlier to ET now that they would be net debt free as well going ahead, and also financing of their capex arms. Apart from this, if you look at the company itself, it's the second largest commercial port operator in India and also provides maritime related services as well. Now, if you look at the customer profile, first is of course 60 to 65% of revenue coming in from the anchors, which is the group companies as well, and the remaining is for the third parties. Also, the cargo handling capacity is roughly at 158 million tons per annum as per June 30th. And in looking at the financials also, we compare the peers, and the EV EBITDA multiple coming in is the only peer is Adani Ports. And currently for FY24 calculations, as per ET now, Adani Ports is coming in at 20 times, while the company JSW Infra is coming at roughly 13 times the EV EBITDA multiple for FY24.
All right, with that, I'm afraid we're completely out of time on this edition of Market Cafe. But while we bid you goodbye, you don't go anywhere and stay tuned to the channel, because the market will take all the action ahead.